Hello everyone, this is Paul from the APN Academy, and in this video I'm going to be speaking about imbalance. It's one of the topics that most of you requested for, and we have given it to you. But before we get into the topic of imbalance, I would like you to understand one aspect which is going to help you to understand this video easily, and that is candlestick psychology. Right now, when we're speaking about candlesticks, most people think we're speaking about engulfings, we're speaking about morning stars, and the rest of the candlestick patterns. Before you get even to the patterns of candlesticks, because a candlestick pattern means that it's a combination of more than one candle, right? But before you get there, you need to understand the shape, because each shape of a candle is communicating to you, it's speaking to you, but most traders tend not to understand that. So I'd like us to first understand the candlestick psychology, then you will understand the imbalance topic with very, very much ease, right? So this is a buy candle, because according to me, you can use any color. Now, to me, blue means buy, and buy means that the price is moving up. Now, I'd like you to understand this candlestick very well. This is the open. What does it mean? The open means that price started from here. When this day, if let's assume this is a daily time frame, or H1 candle time frame, or H4 time frame, even weekly time frame or monthly, no matter the time frame you're in, or 1 minute, each candle represents that particular time frame. So let's assume you're in 5 minutes or M15, and that M15 or M5 candle opens from here, right? Now, this tail here is what people call tails, shadows, or wicks. This wick is telling you that this price went open from here. Sellers tried to push this market down, but buyers rejected and pushed it up. Now, this body is the actual communication of the price. Every part on this candlestick is communicating to you, right? So the sellers being able to push this market down, it means that this area here has presence of sellers. I don't know if we're together. This tail or this wick, let me just go back. This tail or wick, this one here, this one, this is the wick I'm meaning. This tail or wick, some of you call them shadows, wicks, or tails, right? Or rejections. Since price opened from here, right? And sellers tried to push or attempted to push the price to this low here. That's why we're calling it a low. But buyers pushed them back up. So this means that in this area here, we have presence of sellers. It can actually act as support. We're going to see this when we get to the topic of imbalance. Now, when price pushes up, this body is communicating you that buyers are strong. This solid body here, the shaded part, is communicating you that it is strong, a full-bodied candle. This is what we call a full-bodied candle. It means that the price, if it is a buying pressure, it means that the pressure is a lot available, right? Now, this price closed here, but before it closed here, buyers had attempted to push this market up to this certain high here, this certain price. There's a certain price here, what we're calling a high. But when it reached here, sellers were like, no, let's push you back down. So meaning in this area here, there's a presence of sellers. Are we together? In this area here, there's a presence of sellers. While in this area here, sellers are attempting to push down, but there's a presence of buyers. So meaning that these tails can actually act as support and resistance. That's what this means. But most of you just look at it, you're just focusing on the body. Let's take another example. Let's assume we have this type of candle, what you guys call shooting star. Let me shade it to mean that is a sell. Now, this is the open. If it is going down, a sell means that it is going down, right? This is the open, and then this is the close. Are we together? This is the low, this is the high. Now, let's go through the psychology of this candle. This candle means that, yes, this candlestick opened from here, but buyers attempted to push this price up, right? And to a certain price up here, which made a high price here. Then sellers rejected. They said, no, we are more stronger than you. And then they pushed the market back down, right? And then this was the open where it started from. And then it pushed it all the way down here and closed here. But before it closed here, also, it pushed it down to a certain price low here, meaning that before it closed, again, also buyers said, no, you can't close here. You come and close here. So this is the close, and then this is the open. Now, these tails are communicating to you that there's a presence of sellers and buyers in these wicks here, which you people do not tend to consider, right? Now, since there's a presence of people here, these areas need to be tested, as you're going to see on the chart. As always, you know that we start with theory, then we go to the chart. So I just request you stay until that time you're going to be able to see how you can use imbalance. In simple terms, or if you're not someone who likes concentrating on terms, imbalance is simply untested regions or untested areas basing on candlesticks, right? If a candlestick is created and there are no retests, right? That's what we're calling imbalance. We need all those areas to be retested, or we need all those areas to be filled. Are we together? I hope now you understand the candlestick psychology. Now I'm just going to get into the topic of imbalance without wasting time. So what is imbalance? In simple terms, this is the space between two wicks or tails. You guys call them tails, rejections, that is separated by a candle, a candlestick body, a full candlestick body. You can sometimes people call this inequality, inefficiency. I've even seen some people call them fair value gap, something like that, right? But all in all, this is what we call imbalance. It means that that area is not tested, right? Now, this is how it looks like. I'm sure you guys have seen something like this on your candlestick movements or price movements. Let's assume this candle is printed. I've already explained to you that in this area here, we have presence of, in each of these tails here, we do have presence of buyers or sellers, these tails here. Yeah. If you didn't understand, you can just slow down the video, or you can rewind the video and watch that part we started with of the candlestick psychology, right? So these areas here are contain either buyers or sellers, right? So, and all those areas have to be tested. So we are saying that imbalance is the distance or the space between this wick and then this wick that is separated by body. Now, this is simply telling us that this low that this price made here, price broke through it. Now, if price breaks through, we need price to come and test this area, but it didn't test in this case. Are we together? It did not test it. So, and also when this candle broke through, this next candle made the high here, so leaving this space here. Now, this space is what we're calling imbalance. There's some imbalance here that we need price to come and fill. And usually, we're going to look at how we trade it on the charts, right? We're just still on the theory part, just stick around. Usually, price has to come back and fill this space, or what we call do a retest. That's what I'm saying. Imbalance is simply just untested regions, or a place that has not been tested, a place that has not been filled, right? A movement that price left untested or unfilled, right? That's what we mean by imbalance. So usually we need the price to come back and fill here, either break and retest it, right? Because price can either break, retest, and then continue, or price can come, retest, and then continue in the direction in which it was. Alternatively, also here, we have price moving. You can clearly see this is a high that price made. In this case, price was going up. So it made this high here with this tail. Then the next candle broke through, and then the next one also just continued. Now, the space or the distance between this high here and this low that the price made here, there's a distance here that was not tested. Remember, I've told you that when the market makes this tail here, right, there's a presence of sellers in this area that we need the price to test. I'm going to show you in the next slide that when a proper market movement, price has to test all these regions here, because there's a presence of sellers here, right? So it can act as resistance, stroke, support. Are we together? So this is what we mean by imbalance. Just what are the requirements? We need 3 candlestick movements. We have 1, 2, 3, 1, 2, 3. Now, if the next candle just breaks through, creating a space between this one, the first candlestick, and the third one, and there's a space here, this is what we're calling imbalance. The same here. If the first candlestick creates this high here, and then the next candlestick breaks through, and then the third one just continues, creating this space here, this is what we're calling imbalance. Are we together? I hope you get it. If you don't get it, just slow down the video and rewatch it again until you get it. Now, having understood what imbalance is, let's try to look at how a proper market should move, a balanced movement, right? How should a proper market move? Now, you can clearly see this market created this low here. It was moving down. These red candlesticks on my side mean that it's moving down. You can use any color of your choice, but here the candlesticks are showing us that we are going down, right? Now, the next candle came through, meaning that this area has not been tested. Are you seeing? Because we have said in the candlestick psychology part, we said that this tail here means that there's a presence of buyers in this area here. So we need it to come and be tested. Remember, when a support or resistance is broken, we need it to come and be tested. So in this case, this is acting as a support. Now, when a support is broken through, we need a retest, which the market came and tested here with this wick and then pushed down. Are we together? You can clearly see also this next candle here. You see this wick here, right? When the market broke through, but this wick started from here. So meaning this area here was tested. Are you seeing? The market came and made this high here by testing this area and then pushed down. So this is what we mean. This is what we mean by a balanced This is what we mean by a balanced movement. You can clearly see all these wicks are being filled in. All these wicks are being filled in. You're seeing? So this is a balanced movement. But the moment there are spaces between these wicks, right? It means that the market is moving while creating what we call imbalanced situations in the market, which we don't want. So if you identify those areas, make sure you expect a retracement to that area. When it is tested, it can either break and retest and continue to change trend, or it can retest it and continue in the previous direction it was taking, right? So that's what we mean by a balanced movement. Now, how do we trade imbalances, right? Just theoretically, before we go to the charts, one, you just identify those imbalanced regions. You mark them. For example, if this is a candle moving down, the next candle breaks through, right? And then the next candle creates this imbalance here. Let me just shade this imbalance here. You're just going to mark it using your slab or using your 2 lines. Then the next one is you expect price to return to test those regions. Remember, we've said that it's now acting as a support and resistance. Now, by the time the market continues down, this is an imbalanced area or an area that is not filled. So we need the market to come back and test this area before continuing down, right? But also, the third point says that you cannot only use the imbalance alone. You have to also use it. You have to use it with confluences like support and resistance, or Fibonacci retracement levels, moving averages, and patterns. Are we together? Because sometimes the market may break through those regions that are imbalanced, right? Or the places that the market has created situations of imbalance. It can break through them. Now, you may fail to see that. You'll just be expecting to test that area and it breaks through. So you need to bring in confluence factors like support and resistance, Fibonacci, moving average, and patterns if you're a patterns trader, right? So these are the three steps that you need to take to use the topic of imbalance in your favor, or to use if you want to trade using the idea of imbalances. One, identify those areas and mark them. Then two, we expect price to return there. Now, when price reaches there, we have to use that aspect of, we have to bring in confluences like support and resistance, Fibonacci retracement levels, or moving averages. Want them to confluence. For example, if an imbalanced region that you've marked is confluencing with a moving average, you can take your trade nicely. Or if it's confluencing with a support or a resistance, or it's confluencing with a pattern that had been broken and is retesting it, that's a proper confluence. Now, this is all theory. I would like us to head straight to our charts and we observe exactly how we are to treat the imbalances. Okay, so I'm on my chart and we're going to use an example of GBP AUD. We're going to implement whatever we've spoken about. First, we're going to mark the regions of imbalance. Then we'll wait for the market to come there. We're not going to take entries. I just want to show you how price will react to those levels, to show you that they are very, very significant levels, and to show that the price is going to come back to those same levels. Now, you can put in your confluences, the ones that we mentioned. You can put in the moving average. You can use Fibonacci retracement levels. You can use support and resistance levels to make it a very strong level that you can take trades from, right? So remember, we need 3 candles, right? So let's just play here. Then we see. So we have our first candle that was printed, this level here. We have this wick here, right? This green candle. Let me just increase the size of the candle so that you can see them well. Here, so we have this tail here, and then the candle broke through. Now we need another third candle. You can clearly see this candle failed to match this. Let's see if it will match it. You see, it failed to match, meaning that we have an imbalance here. We have this region of imbalance. So if you want, you can mark it like that, or you can mark it with a slab like this. So this region here, this space was not filled. This creates a region of imbalance. So like this. So we shall need the market to come back to it. Let's see if the market will come back to it. The market to continue down, right? So you can clearly see the price came back to it here. Now here you can use all your entry rules. You can put in your confluences. In case you use moving averages, in case you use Fibonacci retracement tools, you can put in all your confluences, support and resistance levels, trend lines, in case you use trend lines. Then you get a proper confluence to take your trade. Let's see if the price will respect this level. Already it's reacting to it. So let's see how it moves. Right? You can clearly see price gave you a good trade from this area here. Why? Because this is an imbalance. This area here was not tested. Imbalance simply means a space that was not filled, a space that was not retested, a region that was not that the price left without testing it. Right? So you can clearly see that we had this region that was of an imbalance. But also here, we do have 1, 2, 3. You can clearly say the market gave a region of imbalance here, like this, here, like this. So if you want, you can also mark it, but it's not good to have very many things on the chart. Our focus was on this one here, right? So if you want, you can leave it out, but if you also want, you can consider it, because we're focusing so much on this one because we marked it, it came fast, and then we wanted price to come here. So let's see how price behaves. Okay. When we extend this imbalance region here like this, you can clearly see also price reacted to it. So we just need price to keep filling up those areas. Now, someone may be wondering, how did we get this imbalance? It was this candle here, this one. It left us a wick here plus this wick here. The distance between here is what it's creating an imbalance. So you can clearly see the market broke through it. We needed to come back and test it. Now, as the market was going down, let's check. Was there another imbalance? Now, I want you guys to observe here. Here, the market was moving while filling. You see, it created this wick. A candle came, then it came and filled it. Let me just clear all this. Let me remove these drawings. I want you to see this. The market created this wick, then came back and filled it with this. Let me just mark it. Created this wick, then the market came back and filled it. Created this wick, the market came back and filled it. So this is a balanced market movement. It's a good movement. Are we together? So that's how you use imbalances in the real markets, right? Let's try to see if we can get in a bullish market. So also here, the market created this imbalance here. There's this imbalance here. You can clearly see. So the market also react to that level when it comes back to it. So it came reacted. You can clearly see with this candle here and then broke through, right? So this is a current market that we do have. And the market also in these 3 candles, 1, 2, 3, we do have this imbalance here that is confluencing with this blue slab here that broke through, that one and this one here. So there's also an imbalance here, but I'm not going to, if you want, you can mark it. But already we have a confluence of another imbalance, this whole region here. Sorry. This whole region here, but the best alternative will be in this area here because it's confluencing this area here, right? So this is how we do use imbalance, right? We need, it's like a broken area that has not been tested in simple terms. In case the term imbalance is disturbing you, it is simply a broken level or a broken space. In this type, it's not, in this case, it's not a level, but it's a space that has not been tested. So we need the market to come back to it, right? Now, this is why the current price is, and we do expect the market to come back and test this area because we have a region of imbalance here. Actually, this region and this region are confluencing. Personally, I think it will come to this lower level because it's confluencing with this imbalance that we did have here. This imbalance here, we had this imbalance and this one here, this region. And also when it was going up, it created this imbalance between this and this candle. So it's confluencing this area. So if you want, you can wait for the market to come in and you use other confluences like Fibonacci retracement tools to take this trade, either upwards, or if it breaks through and retests, this will be also good for you to take the trade, right? But higher chances are it will come back into this area here, then you can be able to take your buy. So this is how we use imbalance. And you can comment below other topics that you want us to make a video on. Yeah, if it collides with our rules, because we're not making videos just to get views. We're making videos basing on what we do trade, right? So in case you suggest something and we've already made a video on it, means that we do not trade using that method, right? We do make videos on what we do, understand what we have used, what we have back tested, what we have traded on live accounts, right? So if this video really made sense to you and you got value out of it, please do not forget to click that likes button so that also other people can come across it. And if it was your first time watching any of our videos, particularly this one, make sure you click that subscribe button. It really helps us and supports us. Have a great day.